I'm Eric Chemi, and this is Politely Pushy. Simon, I'm so glad we could be doing this podcast recording today because I'm a little intimidated, right? Your experience with crypto, NFTs, Web3, digital banking, trading, FX, it's a lot. They're all interrelated. I've done some of these things in the past from the hedge fund point of view, the trading point of view. So I know when they say like a little bit of knowledge is a dangerous thing, I feel like I'm in that boat where you might get some dumb questions. So I appreciate getting to talk to a real expert, but I got to start with just the news, the top of the day here, right? You're talking about crypto and you do bank, like you do banking and crypto, right? And when people hear that, not knowing anything, they're going to think, oh, isn't that all blowing up, right? Silicon Valley Bank, right? Signature, right? Like that's a lot of the gut reaction out there in sort of the mainstream, lamestream media. I'm sure you're hearing that type of point of view from outsiders. What's your take on all that?
Unfortunately, none of it is actually true. So, and both Signature and Silicon Valley, these are two separate instances, which we can dive into real quick. And then there's no connection between the two. This has to do, and honestly, with the banking crisis that we're seeing right now, not just in the US, but is also trickling overseas. Just ask anybody who's working for or has worked for Credit Suisse,
right?
What their day is looking like these days. But what I would say is this, when you increase interest rates the way that the Fed has been doing, and that for the most part, all central banks have been doing for the last 2 years, ever since we got out of COVID, you're going to pose a challenge to those banks to continue to be able to provide returns to users, to account holders, while also being on the hook for different lending products. So what does that mean? That means that now they are going to be taking more and more risk in order to kind of meet that demand. And that's exactly what happened with Silicon Valley. They just could not continue to meet that demand, which made them insolvent. That's the whole story with Silicon. There's really nothing much more complicated than that. It's just that they mismanaged their balance sheet, and unfortunately, Mr. and Mrs. Taxpayer are the ones that are flipping the bill for it. Signature Bank. Okay, Signature Bank is a very different story, and something does not sit well with me around Signature Bank. And I'm going to go into it, and I haven't really talked about it yet publicly, but there are a few of us behind the scenes talking about what happened with Signature. A couple of years ago, Signature released a platform called Signet. And Signet was meant to provide big institutions the ability to do deposits and withdrawals in real time with no settlement time whatsoever, meaning instant settlements for as much as they have in their account. If they needed to move $50 million today at 2 o'clock in the morning, that would settle instantly at the counterparty, provided that they were all part of Signet. So this was a platform that was in production. Signature Bank had a lot of institutional clients using it. And everything was all hunky-dory. I actually know some of the team members from a company called Tacit. Tacit was the actual company that actually built Signet on behalf of Signature, and then tried to also license it with a number of other banking partners. I really don't know what happened with them. But then fast forward to this year, when all of a sudden we saw Silicon Valley, we saw some other issues coming up, and then out of nowhere, Signature just gets taken over and begins to go through the process of breaking it down and handing out accounts to respective banks. There was going to be a full liquidation. But one of the things that came up was that they didn't want crypto companies that were banking with Signature to continue to work with whoever was going to be taking over those accounts. In fact, mandating that nobody provide any kind of banking support to any of those crypto companies. Okay, well, that's something to think about, why they would do that, and you can have your opinions as to why. Barney Frank, by the way, former, I believe he was in the House of Representatives. He has his name on the Dodd-Frank bill that came out after the entire mortgage crisis of 2008. The Dodd-Frank bill was supposed to provide a lot of safeguards within the banking industry. Well, guess what? None of that stuff actually happened. In fact, the opposite is true. A lot of small businesses, one which I founded back in 2008, also folded because of some of the mandates out of the Dodd-Frank. I'm not going to talk about that. I'm going to talk about FedNow. Are you familiar with FedNow?
A little bit. I know the term. I'm aware of it, but I'm not in the weeds on it every day.
FedNow is Signet owned by the federal government. So now let's think about this for a second. You have a bank that is operational, it's liquid, no problems, but for some reason the government decides to step in and shut it down, at the same time going after all its crypto clients, while knowing that there's a platform at play that competes directly with FedNow. So I'm not a conspiracy theorist. I don't like going around spreading stuff, but I have to admit, this doesn't smell right. There's something else at play that is beyond my scope of reason to try to understand what behooved our representatives and the people in power to go ahead and shut down Signature Bank and to do what they did while at the same time FedNow is being announced. So you come to your own conclusions. I'm sure people come to their own conclusions, but that's the one thing that's rubbing me the wrong way these days.
That's something I think we leave that out there, right? For people to listen to that, do their own research, figure out, okay, it's been said now, and people can try to start piecing some things together on that. I want to switch topics because we can dig in on that, but then we won't get to everything else.
No,
right?
I know. That's fine. I didn't mean.
Yeah. I'm like, do I keep going with that? It's that.
We could do a whole episode on that too. Don't worry.
We could do a whole episode on that, but I'm sort of like, the deeper we get on that, the more trouble we could get ourselves into. So maybe we leave it there. I'm going to do a very dumb, very basic question, because you're doing a lot getting to Web3, getting people transition, from Web2 to Web3. What does that mean digital banking wise? I would not be able to explain properly, though, to somebody what is Web3 if somebody asked me that question. So how do you explain that to someone, to a novice? Like, it's, like with the cell phone service, we kept hearing about 5G. Well, what is 5G? I don't know. I guess it's faster, right? Like what is Web3? I know it's not faster, but what does it mean? And how will I know I'm in Web3 versus Web2, which I didn't realize we were in Web2, right? I just thought I've been using the internet since it came out. I never know when it went from 1 to 2.
Well, if you remember so Web3 is just the third version of the web. And what does that mean? So if you remember back when you first started experimenting with the internet, it was basically a unidirectional experience. You would see bulletin boards, you'd see information that other people were putting up, and you were able to read that information. You were able to download pictures, forget about video at a 56K rate or whatever modem you had back in the day. But that's
more like reading a book, right? I can read the book. I see what's in the book. There's no feedback to it.
Correct. It's read only. Effectively. Now you have platforms like Facebook, like at the time MySpace, Friendster, even Blogger. You have platforms that now give you the opportunity to interact with it in real time, not just to read information, but also publish information. Now you have an interaction with your web platform. That's Web 2. So you went from being a read only to now read and write. Okay. So for the last, 10, 15 years, most platforms out there have been Web 2, centralized databases, run by organizations, creating all kinds of different content management systems so that you can interface, that you can upload images, upload rich media content, create blogs, do all the things that you and I have come to become familiar with, again, over the last 15, 20 years or so. All right, but you don't own your information, and you can't really take ownership over any kind of digital asset. There's really no way to mark something as being bona fide. There's no way to know that what you're getting from me is not maybe a copy of or a replication of, or maybe a false representation of. And there's really no way for you to maintain ownership over your, in this case, digital assets, if it's a document or if it's a photo or whatever it is, it's an asset, without relying on a third party. That's where Web3 comes in. Web3 brings the power back to the user. It empowers users so that they can decide what information they want to share or not share. It empowers users to actually be able to prove ownership of certain assets. It empowers users to basically be effectively their own bank in certain ways when it comes to crypto and transacting. self-custody of those digital assets, just like you would with cash. You can self-custody cash and jewelry and gold and all this other
I
stuff,
can
or
stick
you
it in
can
the mattress or stick it in the vault somewhere. So this is the digital version of sticking it in the mattress or the vault.
exactly, yes. So you now have full control over any of the assets that you own. You can prove ownership, and then you can decide also what you want to do with those digital assets. No one's going to be able to take it from you unless you approve and authorize that transaction. So that's really the crux of Web3.
So that's a very, very different version of digital banking then, right? Like if you can control it yourself, well, what kind of services does somebody need now? If you just said you're the bank, right? So if I'm the bank,
Mhm.
how can a service help me? So what are you working on right now when you're helping people get from Web2 digital banking to Web3 digital banking? If it on one level, if Web3 digital banking is DIY.
Yeah. Well, before I talk about that, you do realize the statement of now that you're on you are effectively can become your own bank. Why that would rub regulators and the Treasury the wrong way, for
Oh,
an entity
yeah.
that for over 200 years has been controlling the supply of funds within the U.S. Now all of a sudden, out of nowhere, comes some sort of decentralized
Interest
ability.
rates, money supply creation, loans to businesses, all of these things rely on the fact that we put our money into banks and then they distribute our money to affect these goals.
And then back to our original discussion
Right.
regarding Silicon Valley Bank, right? But how do we do a transition between Web 2 and Web 3? So I'm right now the head of Web 3 for a neobank, and a neobank is essentially just like any other bank out there, except without the brick and mortar locations. So you download our app, you go to getcogni.com, you download the app, you enroll into an account just like any other bank or any other kind of brokerage. When you open up an account, we have a fiduciary responsibility to make sure that we take your KYC, your know your clients, customer information. And then based off of that information, we approve or not an account on your behalf. And then you are basically off to the races. So let's start with that. You have a traditional, we'll call it a Web 2 banking platform. You can deposit your money into, you can withdraw it at ATMs, you get a physical debit card, you get a virtual debit card, all the bells and whistles that comes with traditional banking. But now, because you're using it to custody your fiat, why not expand on it and now bring in the world of Web 3 of digital assets, the ability to custody your own digital assets from NFTs to all the different cryptos that you may or may not want to own. So that's what we started doing. We actually went live last year with our non-custodial wallet. That means that anybody that comes into Cogni today, signs up for an account, gets approved. Not only will they have all the bells and whistles of your traditional Web2 fiat banking, but now you'll also have the ability to custody your crypto, your NFTs, send and receive crypto and NFTs. And then coming down the pipeline this summer and beyond, allowing our users to buy and sell crypto and NFTs against the fiat in their account. That's how we're bridging Web 2 and Web 3.
What do you think about everything going on now with the stable coins and Tether and everything where it's just when you read the mainstream kind of business news, right? It's just these are problems, these are breaking the buck, can't trust it. Look at all the failures.
Mm-hmm.
There's really a sort of an anti vibe, right? There's an establishment against this type of vibe, and you see that it's pretty pervasive. So it's hard to know what's right, what's wrong, what's an opinion, what's in a point of view, and maybe are these just two sides of like what you said? Maybe there's a certain side of an establishment that doesn't want these things to succeed.
I'm not going to talk about that because again, I'm not a conspiracy theorist, but I will say this though. The word trust comes up a lot in my industry, and for a lot of reasons. The technology provides trust, but the people behind the tech
Right.
who go around it cannot be trusted. Look at FTX, look at Voyager, look at 3 Hours. There's just the list goes on and on and on. So
And it's
we
in
have,
any industry, right? If
oh
financial is
yeah,
harder because it's our money, it feels like it's more of a
yeah.
direct robbery, but the trust problem is in any industry.
It is, and I'm sure. Look, I mean, I can cite MF Global, for
Yeah.
example. I don't know if
Yeah.
you know about MF
Yeah.
Global, but
John
okay, you do
Cornyn,
know.
the
There you
former
go.
Goldman guy, Jersey, senator, governor, all of that. Yep.
Yeah. And then all of a sudden, one day, $700 million just disappeared. Nobody knew what happened. Nobody knows. Everybody's pointing fingers,
And
and
that story just
nothing
went
came out
away.
of it.
It's see, if you wait long enough, the story just goes away.
It just goes away. Enron. I mean, come on, man. The list goes on and on and on. So yeah, so it exists both in traditional markets and non-traditional markets. But this is what it boils down to. The reason why we are very, very confident in our approach by bridging Web 2 and Web 3 is because we are now able to provide a trusted platform that hasn't existed yet before. Bear with me on this. You're familiar with Coinbase. You're familiar with Kraken. You're familiar with Binance. These are all centralized exchanges, just like FTX was.
Right.
Where when you deposit funds on platform, it's now theirs. That's it. With us, because we're a neobank, when you deposit funds with us, it's FDIC insured. It's a bank account. So again, look at Silicon Valley. Went bust, everybody got their money back. And then, well, they got way more than the 250 that was originally guaranteed by FDIC. So if we ever go bust for whatever reason, our customers will always get their money back, whatever they had in deposit. No exchange on the planet can make that same kind of guarantee.
They'll get the 250. They'll get up to 250 back, minimum. And then maybe someone will kick in a little extra for them. If you go
well, the 250 minimum. But again, if you look at if you look at Silicon Valley Bank, SVB, then you'll see that everybody got all of their money back, backed by the government. 140 billion has been assured.
Right. Because Coinbase is no different than you put your money in a Schwab trading account, right? That's
correct.
Just a trading account. If they blow up or you lose it, you're done.
Well, if in this case, Coinbase, Kraken, any of these centralized platforms that are not providing FDIC insurance, if they fold tomorrow, your funds are gone.
Although they say, like in the Coinbase case, if you own crypto, so you own your Bitcoins, that's in your own account. And even if we go out of business, your name is associated with that. Let's
talk about that. If it's self-custodied, so Coinbase does offer their own wallet, but Coinbase also keeps coins on platform as well. That's why they have insurance from Lloyd's of London, because they do act as a custodian for their end users.
Right.
And for good reason. A lot of people don't want to custody it for whatever reason. But if it's still with the platform goes down, again, look at FTX. Again, there are enough use cases out there. You then have to chase after them for your funds again, because you never owned it. Now, with us,
you might get it back. Let's say even if you do get it back, but you're not getting it back instantly. Now go track it down.
You're definitely not getting it back instantly, and you become a creditor like all the other creditors. In the event.
Oh, go ahead. Yeah. Finish.
No, I was just saying, in the event those platforms go down and go out of business, then basically funds get what's going on with FTX, where they're trying to find money, they're trying to liquidate assets and to try to make investors whole, and they're not going to make investors whole. I don't even know if they're going to get 25 cents on the dollar. I have no idea.
Right. The sidebar on that is, so I've experimented with some crypto trading, right? I had the Coinbase exchange, and then before FTX blew up, there were just enough rumors that I would see on Twitter from my conspiracy theory friends, not me, but others, that saying Coinbase or somebody's going to blow up. I guess they were right because it was FTX, but I got nervous. It's like, oh, if they blow up, I'm going to lose all this. So I put it in my own wallet, and then I was thinking about all the things I had to do to keep it safe. And with your codes, and do you have the hard, is it hot wallets, cold wallets? You have like the metal, letters and numbers and all that. And it was like you said, I'm the bank now. So I need to be able to keep track of my assets with my codes, my passwords. And you want to have duplicates. Okay, if I die, my mom has it or my wife has it, right? Or something like I need backups, but I also need not so many backups that the wrong people get it. And you start to realize that you have these sort of overlapping problems of, ideally, I'm the only person with the information, but the more backup I have, the less trust I have that it doesn't get out. And so eventually I gave up. So I'm just going to put it back on the exchange, because I think I trust them more to do all this than I trust myself to be my own bank. And there's a lot smarter people that have figured this out. So that's why when you start talking about neobanks and digital, and we are our own banks, I tried to do this, and it's very stressful, because I almost rather they lose it and I'm a victim of a crime that they stole it from me, then I lost it because I'm a victim of being an idiot.
Yeah, so you're making a good point, and that's really why we see centralized exchanges still operating the way that they're operating, because there is a level of convenience to the end user, knowing that in the event Coinbase gets hacked, you'll still be made whole because they have insurance to cover that. Whereas if your phone gets hacked, and that's happened to me, I've been SIM swiped, I think it's called pirated or SIM swap, sorry, SIM swap before in the past, and luckily they didn't get any keys because I didn't keep any of the keys on my phone. What I do is I print it out. I just have a hard printout QR code that I fold and I tuck away in a bookshelf somewhere. That's it. That's how I back up my key. It's offline. No one can get to it, provided if one of my kids goes through the book and pulls it out, they might want to scan it, but I don't think they'll understand what it is, or it's not going to take them anywhere. It's a private key. So yeah, I feel super safe doing it that way, keeping my assets off chain. When I need them, if I want to sell some, if I want to take a bit of a profit off the top, I'll just pull it out, scan it, key comes back, all my assets come back, and I'm good to go. But we already custody stuff. I mean, we custody cash, we custody jewelry, we custody, you know, v- valuable pieces of art. There's really no difference here. I think that it's going to take maybe another generation for us to be super comfortable just maintaining a 12-word mnemonic phrase
Right.
somewhere or a
Right.
QR code that represents that key. I think that's all it really comes down to, because we already do way more complicated stuff in our day to day. We're just not accustomed to keeping a piece of information secure enough and away from people that could use it, for illicit reasons.
What is your biggest challenge at work? So it's a neobank. It's getting people to banking in a Web3 world.
Yeah.
Are you dealing with more regulators? Are you dealing with customers who don't maybe understand? Is it there's too much competition from a sales point of view? What keeps you up at night
Um,
mostly?
Yeah, well, that's a very open-ended question, because there are things that worry me around Web3. But as far as neobanking, let me start with neobanking. With neobanking, our biggest problem, believe it or not, is the fiat Web2 fraud that happens, which happens to every bank. People try to write fraudulent checks all the time. They try to do a rug pull on ACHs. They try to move money and then immediately cancel it. And then we have our support staff trying to run after these people, blocking them off, notifying corresponding banks. So the compliance risk fraud department in any fiduciary or banking institution is probably the boiler room of that organization, because they're constantly on high alert, because there are people out there consistently looking to find a flaw in your security, in your setup, in your process, and make it worth their while for doing so. So that's the biggest challenge, really, honestly. From my perspective in the world of Web3, I'm not worried about regulation. I embrace regulation. It's probably something you don't hear a lot from Web3 people. I love it. I come from a regulated background. I used to be a commodity trading advisor. I used to be registered with the National Futures Association. That's how I started my whole fintech career. So after getting a Series 3 license and then spending some time in commodities and FX, and I have had some experience also on the security side, doing all kinds of issuances around Reg CF, Reg D, and working with a FINRA compliant or FINRA member firm. I embrace it. It's not something that we need to try to run away from. Let's try to use it to our advantage, provided it's smart regulation. I could point at a bunch of things in the Dodd-Frank bill that came out. When was that? 13 years ago. That was just a complete miss all around the world.
And that's
But
always hard with regulation, right? Because there's different
yeah,
stakeholders that want certain kinds of regulations. And then you've got to translate that to politicians who have to translate that to the people that write the laws, then translate it to the people that are actually enforcing those rules in their departments. So we often see that, right? We often see regulations usually have the opposite consequence for the end
it's
consumer.
unfortunate. Yeah, it's unfortunate, but it does happen. But I think that what that means is that we just need to get better at writing regulations. And I think that for the most part, government has a hand in messing that all up. The people in charge rely on the wrong people for input. I mean, shit, just look at who is on the board of some of these SROs, self-regulated organizations like the NFA. They're all CEOs of brokerages. So who do you think is writing these rules and regulations? It's the guys, the men and women that stand to benefit from certain rules coming out, and will make sure that it doesn't benefit those that are not part of their little boys club. So there's a major problem. Now, could we solve all this through decentralized voting? Yeah, absolutely. But we could solve a lot of things that the government just won't enact on because look, these congressional hearings where you just realize that nobody in Congress knows what the hell they're talking about, and they're all pretending to know what they're talking about. And I've seen this over and over and over again. Until people in power understand the challenges and understand the values and benefits that technology can provide, nothing will ever happen. The needle will never move, unfortunately.
What did you think about Facebook, or AKA Meta, moving away from the metaverse, shutting down a lot of their projects? They're moving back to AI.
Yeah.
They changed the name of the company
to Meta. I know.
And
yeah.
It's like,
timing.
Yeah.
Timing. What was the first PDA? Do you remember?
I mean, there was the Palm Pilot, but that's probably not the first one.
Before that.
That's the only name I can remember.
Do you remember the Newton?
Oh yeah. I remember the Newton. Right, that came and went. Right, so it's the first one is never the winner in any of these categories. Facebook itself was not the first social media platform.
Correct.
Google was not the first search engine. Apple was not the first cell phone. Right, so we know the first one is never the winner.
Correct. Yeah, and that's what happened. I think Meta was just trying to. So Zuckerberg was just perhaps a little too ambitious. Clearly had the money to make it happen.
Right.
And realized is just wrong timing. So it was just bad timing. I think we'll see it reemerge at some point in the future when there's more technology, when there's more high-speed bandwidth available to the rest of the world, when processing power has doubled. So there's probably a few variables that have to happen before we can readopt it. Just look at the Newton. So the Newton came out. But what are you going to use it for? Where was the use case? What problem was it solving at that time? Okay, you didn't have any kind of internet. I think at most you were able to send faxes maybe back and forth. I think that's all it was. And there was no email. So like it was way before its time. So I think in this case with Meta, I think it's just timing. Maybe 3, 4, 5 years from now, they'll circle back with a whole new offering. There'll be other platforms that'll be positioned to work with Meta better than they are now. So yeah, that's my 2 cents.
Meanwhile, I just saw here a site says from Forbes, for the record, Apple's Newton was not the first PDA. People had them already, but whatever. But like it was pretty early on. So I don't know this. I'll send you this later. I just quickly scanned it. Yeah, there.
Okay.
But it was relatively very early on, right? So
yeah.
But you're doing a lot, as part of this Web3 world, like metaverse. Like, does it affect the digital banking space? Like, is there something to do? Does the metaverse relate to that?
No, it doesn't relate. But people who are metaverse fans, so people who play games, let's say gamers. Okay, right. So you have a lot of metaverse-based games. You just have also decentralized-based games. They need to be able to interact with those platforms, with metaverses, with gaming platforms. So they need to have their own wallet. And at the same time, they need to have a secure and trusted means to buy crypto and then maybe even sell it. So that means that they need to have a wallet. That means they also need to have an exchange account. They might need more than one crypto exchange account, depending on geographically where they're based. I'm in New York. I can't open up a Kraken account. I can only open up a Coinbase account or Gemini. I can't go to Cross River. I can't go to CoinZoom. Beaksy just shut down anyway. But they're the limitation.
What's the reason why? Is it just U.S. regulations that the rules?
Specifically in New York. So New York specifically has something called a bit license, which was enacted by somebody. I'm not going to mention his name here because basically what he did was he enacted regulation, pushed it through, and the minute it went through, he quit his job and then went to go work for a bank to make it happen for them.
Oh wow!
So
yeah,
who is that? What I mean.
Who did that?
Sorry.
Who is that?
Like I said, I don't want to mention his name.
I thought you might slip up and say it.
Just look up the creator of the bit license in New York.
Okay.
Yeah, I don't think people like that deserve any kind of PR.
So finish what you were talking about though with the gamers, metaverse.
Yeah.
Yeah.
So Yeah, so these are so this is, a luxury to them to be able to, spend time doing whatever it is that they enjoy doing in these scenarios. So how are they going to do it? Well, they need to have crypto, and they need to have a wallet and a means to connect, and a means to buy and sell said crypto to continue to transact on those platforms, and just enjoy the activities. That's where a neobank like ours would come in. That's where a platform like ours would come in, which is where we bridge fiat and crypto in a unified platform, allowing our users to connect securely to Web3 dApps, decentralized applications,
Mhm.
like metaverses, like gaming, like NFT marketplaces, like exchanges, anything that's a Web3 compliant platform, and to allow them to seamlessly continue to operate, allowing also the metaverse or the game or whoever it is to continue to expand compliantly as well. We are also working, and we're actually going to be announcing it next week because we have a party going on. We're releasing an identity as a service application. This is an application that basically takes traditional Web2 KYC, know your customer information, and then ports it into a Web3 environment, so that now anybody with a wallet, which is still technically anonymous, can choose whether or not they want to uh, uh, divulge who they are. And that information that they're divulging has already been verified to the highest degree. And by highest, I mean the same kind of verification you would go through when setting up a bank account. That's the verification level we're providing within the Cogni passport. And that's going to be available to users. Well, it's already a proof of concept, minimal viable product, and we're making an announcement next week. But this will be available to users very, very soon.
How much are you concerned about the big banks coming in, copying this, doing this, just saying, okay, we'll see what you do. We'll copy it. We'll get there. And then it'll be a service that we add on. If we're Bank of America, Wells Fargo, Chase, those kind of guys.
It doesn't really worry me much. I mean, reality is it's not bad. It's rising tide lifts all boats. You know the phrase, right? So I'm not worried about that. I would doubt that would happen. The big banks are slow as molasses, so they don't do anything on just a hunch, or they don't know how to just turn on a dime. It doesn't exist with these
That's
large
not how they
institutions.
operate. They're built
Yeah,
for stability and let's deliberate for a few months before we do something and get
exactly.
hundreds of
Neobanks.
stakeholders to agree.
Right, but neobanks have that flexibility. Neobanks, which are smaller, way more nimble, a lot more flexible, can enact these kind of things. So I'm actually predicting a wave within the neobanking industry that then starts to offer Web 2 and Web 3 to their end users, because it's a much, again, we can provide the same quality product that Coinbase, Kraken, Gemini, Binance, you name it, are providing to their current users, but we do it in a trusted environment where you own the assets, not the neobank. Where if the neobank fails, you are FDIC insured. You're covered. Nobody else can do that. So why wouldn't we see neobanks start to pick that up and start running with it? Again, knowing that the markets are still growing, people are adopting more and more crypto and Web3. It just makes sense all the way around.
So then what stops, let's say, use Coinbase as an example, what stops them from setting up a neobank so that they got that insurance? If that's the thing that they're missing, is that, hey, at your firm, you're insured,
Yeah.
but at their firm, they're not.
They would make less money. So, yeah, to just cut to the chase here, the model that we have isn't as profitable as the
Okay.
Coinbase model. And why is that? Because Coinbase, I'm not saying the Coinbase model specifically, a
Yeah.
centralized exchange model.
Centralized exchange model. Exactly. Yeah.
Centralized exchange model is more profitable than what we're about to do, which is a straight through processing model. And the reason why is because with a centralized model, hypothetically, let's say you and I are the only people on the platform in a
Right.
centralized exchange. You're buying, I'm selling. We're both being charged a commission, but guess what? Nothing moves.
Right.
So you're charged a commission, I'm charged a commission, but both of our funds are still on the platform. Nothing happened.
Let's
It
point to
just,
different people. Yeah.
that's it. There's a ledger update. So your ledger gets updated, my ledger gets updated. With what Cogni is doing with a direct market access, what happens is that crypto does move from your wallet into someone else's wallet. Fiat does transact, but because of that, there are gas fees. There are other scenarios we have to take into account,
I
and
see.
we don't make the market. That's another thing.
I see.
Centralized exchanges make markets. Cogni does not make a market. So you're buying and selling directly from other peers on our platform. We, of course, take our commission, but we don't set that rate.
Okay. Okay.
So
So
that's
that's the
why,
trade-off.
yeah, it's the trade-off. It's not as profitable, but at the same time, you're ensuring trust. You're definitely keeping your fiduciary obligations valid. I can sleep a lot better at night knowing I'm not custodying everyone's assets. And of course, we've got
It's
to
less your
understand
problem. I'll make
not
a
my
little
problem.
less, and it's less my problem.
Correct. That's what it comes down to. I'll make a little bit less, but I'll give a trusted platform to the
Right.
end users who are worried about that stuff.
So before we go, what's your advice to the normal people out there? Maybe they got involved in some crypto when it was the big rally. Maybe they sold, they lost some money. That's sort of the typical default behavior over the last few years. People
Yeah.
jumped in a little late, got out at the wrong time, and they're looking at Web3. They see metaverse getting shut down from Facebook, for example. Like, just someone who's trying to make sense of this, but they're an outsider, right? They're the normal worker who's been, hey, I've been in finance or tech, but I haven't been part of the modern stuff. I want to get involved somehow, but I'm scared. What is your typical advice to somebody like that?
Well, I would say, what's your interest? What are you interested in? Are you interested in collectibles? Are you interested in gaming? Are you interested in
Maybe from
learning
the
about?
investment side, right? Someone who's just saying, how can I
Uh,
keep some exposure here so I don't lose out if all of this really starts to
yeah,
take off?
yeah. So if I'm going to put on my CTA hat from back in
Yeah,
the day,
yeah,
I got to make
exactly.
sure, first off, understand that past results are no way indicative of any kind of future results.
Yep.
Okay, and stuff like that, and that I don't give out financial advice. Okay, now that we clarified that, Bitcoin seems to be the gold standard, and it will always be the gold standard in crypto. If you think crypto is here to stay, then put some money into Bitcoin. Because if you think it's here to stay and it's going to outlive you, most likely, then start putting a little bit of money into Bitcoin, because it means the value of Bitcoin is going to continue to go up. Bitcoin is locked within I'm going to put a little asterisk at the end of that statement, at 21 million coin.
Right, right.
The only way that it would be unlocked is if you have a 51%, I'm not going to say attack, but a 51% consensus across the Bitcoin network, where the decision is about to be made, let's mint more. Most likely won't happen. But if you know that there is a finite amount of resources and the demand is always going to be there, then law of economics, pricing will go up in time. That's my only really 2 cents.
I
Now,
like that. That's a good simple one. It's like, if you think
yeah,
crypto's here to stay, get a little Bitcoin, and don't maybe stress about everything else. Leave that to the experts, or start
leave it alone.
there and then research.
Correct. Agreed. Because if you start thinking about, okay, well, there's all these different protocols. There's Solana, Ethereum, Polygon,
There's all these
Avalanche.
NFTs, right? All the Bored Apes blew up, right? Everyone jumped
Yeah,
on it. Yeah.
and that's sort of like a fad, because if you want to talk about NFTs, like, people are buying NFTs, Bored Apes or whatever the club is, thinking that they actually own that copyright. So people bought Bored Apes thinking, I'm going to produce a bunch of shirts, I'm going to produce a bunch of swag, I'm going to produce a bunch of. We've done the same thing too, but
Right.
we're not about to start selling those things because we technically do not own the copyright. So there was a huge wave of people jumping into things with wrong assumptions. So I will always point that out for people who don't really understand the market, saying, listen, don't come in with any assumptions. It's very simple. Do you think it's going to stay? If so, Bitcoin is the place to go, and just keep it at that.
We'll clarify for people. A lot of people did think NFTs meant you owned that copyright. There's only one. There's one of these. It's yours. You have it. Clarify for people who thought that. What's the reality then?
So you're not wrong on that part, but the copyright to the intellectual property is not bound by an NFT contract. It would be bound by an IP or a copyright contract. Let me explain. Now, by the way, I'm not a lawyer. I just play one sometimes on a lot of these
Can I
patents.
guess? Is it more like the creator made it? It's their copyright, and you get to buy the one thing that they made, but they were the ones that made it, so they still own the copyright. You just
Yeah,
bought the product.
correct. So if I did a custom drawing and I sold it to you for $1, doesn't mean that I sold you the right to now reproduce that.
Right. Right.
So one of the famous examples years ago, if you're familiar with the Teenage Mutant Ninja Turtles,
Yeah.
so Haim Saban, who's the creator of it, basically bought the rights at a wet market or something in China, because somebody was putting some baby turtles and put some like ninja outfits on them and tried to sell the ninja outfits. So he didn't just buy that, he made sure to buy the rights to that IP. That's the difference. I can own a painting. It doesn't mean I own the rights to reproduce that painting.
Got it.
Okay.
Got it.
Yeah.
That's super helpful. This is fascinating. This is great. We could go on all day. But you have real work to do.
I do, unfortunately.
I feel much smarter having talked to you. So I'm glad that we got to spend this time, Simon.
Oh, awesome. I'm glad. Okay, good.
Great. I'll talk to you soon.
You got it. Thanks, Eric.
Thank you to my guest, and thanks for listening. Subscribe to get the latest episodes each week, and we'll see you next time.